Yeah, personally, I like to have probably a year's living expenses in the currency of the country that I'm living in. I think it's prudent to have that. Some people I know some people that they only like to have 3 months of living expenses, particularly people that are enthusiastic about Bitcoin and so on. They want to keep everything in their cryptocurrencies and just exchange it as they need it.
Welcome back to Acequisition. If any of our channel's 5 key verticals, stocks and shares, including commodities, acquisitions, including you yourself potentially taking part in hostile takeovers of public companies with us, profit maximization, asset protection, and tax minimization, sounds like everything you'd ever need in your finance journey, please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room linked in the description so you can get in these plays and opportunities when we do. When you allocate your portfolio, obviously you need some money in dollars or sterling or Canadian dollars. Would you say you're like 90% in commodities and you just cash out when you want to spend in dollars because you have to at the moment?
Yeah, personally, I like to have probably a year's living expenses in the currency of the country that I'm living in. I think it's prudent to have that. Some people I know some people that they only like to have 3 months of living expenses, particularly people that are enthusiastic about Bitcoin and so on. They want to keep everything in their cryptocurrencies and just exchange it as they need it. Which, fair enough. That's that you've got to do what works for you. I personally like to have to be pretty well diversified and make sure that I've got commodities, I've got cryptocurrency, I've got stocks. And I've got enough cash around to cover my living expenses for at least a few months, even if because who knows what happens. You have to think of all circumstances. We all like to have gold. We like to have crypto, but there may be times where it's not possible to get access to your gold because certainly if you've got large amounts of gold, you should not be storing it at home. You shouldn't be storing it in a bank. So you've got to sell that gold, you've got to arrange access to it. You've got to then sell it and so on. So,
I've read books where if you're looking to invest in stocks and shares, still better than having dollars or sterling. How much of your portfolio would you suggest there? The book I've read, The Zulu Principle by Jim Slater, I think says invest in 10 really good companies that you understand, microcap companies, because you can only lose what you put in, but they could go 1,000%, which is obviously huge. But he still only suggests, I think, 20% of your wealth to be going into these types of plays. And then I guess in your instance, the rest would be commodities and gold and silver, with then a year's salary or spending money in dollars. Yeah. Makes sense. Would you say that's?
I think that makes sense. Obviously, in terms of stocks, if I think you've got to look at different sectors. If you've got large cap stocks that are paying decent dividends, for example, some of the oil stocks at the moment pay decent dividends, so it might be worth having a higher percentage of your portfolio in large cap stocks that are paying good dividends rather than in the bank. You've always got a market risk there. You've got some of the gold stocks like Newmont or Barrick, which may be worth having larger investments in. But yes, I think what you were saying about the Zulu principle is absolutely right. He's talking about smaller cap stocks, and you certainly wouldn't want to have. And he's right in what he says. I agree with 100%. 20% in small cap stocks that you know really well, and I think that's the key. Stocks that you know really, really well.
That's why it's only 10.
That's the crucial point. You wouldn't want to have 20% of your portfolio in random small cap stocks. So my argument on that would be, and with some of the things that we're going to talk about, if you're going to have 20% of your portfolio in small cap stocks, it should probably be stocks that you must know them inside out. But I'd go a step further than that, and you want to have that large percentage of your portfolio in small cap stocks that you might even have control of.
Which is what we're going to hopefully be doing soon.
That's what Jim Slater did at his peak as well.
And for people who don't know, I'll put the book on screen. He was outperforming basically everyone and the market over his tenure. And a screener I use, they actually dedicate a screener to him. So back in the 1980s or whatever it was, he was having to spend weeks and weeks of research trying to find these 10 companies he's going to love and invest in. Now you can just go on a screener, type in his criteria. I mean, if you haven't read the book, they do get it slightly wrong from the one I looked at, so you could do a tweak here or there. But I did a check on And I did a test with the demo account when I first read the book in 2018. 3 years later, everything had run 300% or more, which is great. So 2018 to 2022, 4 years.
Goes to show that the principles still work.
Exactly, yeah.
As for me, I like the stock.
Order filled.